Welcome back to Blockfield. We are here live with Craig Birchall, head of product over at Membrane Labs, James Roth, head of partnerships at Membrane Labs, and co-founder of Maple Finance, Sid Powell. So welcome everyone to the Blockfield Live. And first question, first and foremost, welcome to the show.
Oh, thanks for having us.
Thanks for having us.
Thank you, Avi.
So a lot of the past few months, everyone's been really focused, on the elections. Things have been crazy. No one knew what would happen. So I guess the first question, post-election now, Joe and Carson, how do you guys see like post-election political climate shaping crypto regulations? I know people inherently have seen Trump being more positive, but would love to hear from like the institutional lending side of things, where you guys foresee things going.
I'm happy to kick things off. I think on the lending side, post-election, we saw a very positive reception. On the lending market, you've got both borrowers and folks providing capital looking to earn a yield. And we saw a pretty immediate reaction post-election. Even in the lead up to the election, we saw a lot more interest in borrowing as folks anticipated that it could trigger a bull market. It's always probabilistic, but we did see a distinct uptick in that kind of demand from borrowers. And then since then, we've seen more outreach from what you would probably call more traditional players who have dabbled less in crypto. And I think this is coming from anticipation of that more favorable regulatory environment, wherein traditional institutions think that they would see less restrictions or blockers coming from the regulators, and being able to participate in, whether it's lending stablecoins, holding stablecoins, fixed income on chain. So that's been really exciting.
Yeah, no, I mean, honestly, definitely that's I think a trend that we've been seeing through the market, Sid. And, on the other side of that, I mean, Craig or James, definitely any thoughts from your side?
Yeah, I think when well, one thing everyone's focused on is obviously what's going to happen to the traditional financial institutions as well as the banks, and we're already seeing even just with the fall of Silvergate and Signature and kind of the uncertainty that we've had in the current regime in the United States. Banking has kind of been disparate and all over the place. And we've started to see that more and more banking providers are coming into the space. And then I think that that's going to translate at some point directly into lending, where whether it's through joint ventures, startups that they're doing, spinoffs, at some point, I think the regulatory tailwinds there when it comes to the bank's capital treatment for what they can hold on their balance sheet is going to be, it's definitely something that they're all thinking about and focused on with kind of the recent news.
Yeah,
I think.
Oh, go ahead.
I was going to say, I think there'll be a pickup as well once we have, once we see some of those appointments get confirmed, because there's still obviously some uncertainty, as we saw recently with Gates, where somebody who's an intended pick still might not get through. But I think the direction and what we can expect from the SEC is going to be much more positive to lending. You only have to look back a couple of years to where you saw effectively, proposed lending activity by Coinbase was banned. BlockFi obviously had lawsuits from the SEC. And if institutions know that they won't, they're not going to get sued, I think they'll be much happier to come in and start doing lending activity. Although for us, it'll certainly mean that any startup in the space is going to have to get their skates on.
Yeah, I also think it's worth. A couple things. One, I think it's going to take time for anything to come to fruition. And so we'll see kind of how that plays out, over the next months, years. But also what I think you see and what you will continue to see more of is with regulatory moving in the right direction, with regulations moving in the right direction, I think you'll see also a lot more smart contract lending, more kind of as the regulatory restrictions lessen. And you saw the run up in prices of things like Uniswap and other Aave, a lot of on-chain lending that takes place in pools as opposed to bilateral lending off market or off chain. We also see that as being a huge beneficiary of what's to come over the next, however many months and years. Let's just, hope that a lot of the rhetoric can translate to actual legislation getting put through. And I think that's what the market is sort of waiting for. But in lieu of that, price going up certainly helps appetite grow. And I also think you get, and we can get into this further, but what we've seen a lot of is that traditional players, in particular, we'll name people like custodians, who now that regulations have sort of, or they look to be lessening, those are the types of institutions that are going to step into the space because custody rates are going to zero. And it's only getting cheaper and cheaper to provide custody. And so they need other ancillary offerings like lending on the bilateral side. So we think a lot of institutional money will actually go towards wholesale lending to those entities. And then ultimately that'll flow through the market in that way. And those are some of the partners that are working with Membrane on leveraging our technology to help implement those sorts of lending businesses into their otherwise, what were stayed just custody models.
Mm-hmm. Yeah. I mean, the one thing I was thinking is like, so, having been in this space a long time now, late 2012, 2013. I mean, when all, the first lending round of lending started, I mean, it was just like everybody in there, everybody was just doing it. And it was like, yeah, forget the licenses. We don't need that stuff. Like, we'll just go out and lend and borrow. So
that ended well.
What's up?
that ended well. Yeah.
Oh, yeah. It depends on which side of the equation you're on that one. Yeah. But when you look forward though, I mean, I know a lot of people are saying, oh, this is gonna, all this, the new regime, the new, all the changes in Washington. I mean, this stuff's gonna take time, so I mean, a lot of time. This stuff, there's a lot of things I think ahead of digital assets before they're gonna, that need to get done before we even get to that. But with that said, the less scrutiny on the regulatory side, how are you adjusting, both at Maple and at Membrane? How are you both adjusting your plans to take advantage of these regulatory tailwinds and, the various things that you think are going to be coming?
I mean,
Sid,
I think from the
start with you.
Yeah,
Craig,
Sid,
go for it, Craig.
Yeah, no, I was going to say from our side, Membrane traditionally has kind of been more of the post-trade system for collateral management, life cycle management, things like that. And so what we want to be able to take advantage of is then getting earlier in the life cycle and also in part of the portfolio management stage. So almost like akin to, we think of it as like a plan for a lending cockpit where we can have risk analytics that happen pre and post trade. We can start to bring into James's point as more and more folks go on chain, bring in the on-chain data as well as their off-chain bilateral information into one central repository. Again, whether for risk analytics or managing your book and your portfolio. And then also are looking into coming up with ways where folks can execute yield opportunities both on-chain and off-chain bilaterally through our system. So again, making it so it's a central place for making not only managing your lending book, but also making lending decisions. And we believe that there's a large opportunity there.
For us, it's the customer set we're going after. So Maple's business, we have Maple Direct, which will mostly look at institutions and accredited investors. And, from 2023 through most of this year, that was just talking to generally folks who'd made their money in crypto or hedge funds, crypto hedge funds. But I think with the anticipated regulatory softening, what we would look at is now starting to reach out to credit funds, private equity firms, more traditional asset managers who are going to have less of a skeptical eye towards the space now that, one, we've got a bit of a regulatory softening, and two, now that it's 2 years since FTX is in the rearview mirror, and so there's less skepticism around the space. So I think that's ultimately where most of the money lies, and so those are the type of customers that both us and Membrane and any other startup in the space needs to bring on if you really want to scale this space. So that's probably the main thing I've seen. And then one other point of color would be much more confidence in approaching DeFi partnerships. So we created a syrup.fi product, which integrates with DeFi protocols like Pendle, much more confident in going out and getting more of those partnerships and growing it now that we think that there is going to be less scrutiny DeFi, or rather less hostility towards DeFi.
Mm-hmm. What do you we just mentioned a lot of kind of what's happening in Washington. I think, you hear these rumors of Trump talking about, backing the U.S. with it, from a treasury, and you hear other countries
BTC
and
reserve,
companies, even with MicroStrategy, and now we saw like Saylor's going to go talk to Google, and there's not to Google to Microsoft. So there's a lot of like positive tailwinds, I'd say. How is this, and kind of piggybacking off that last question, like what other trends or like innovations are you guys seeing, like new products coming out, new interests? You mentioned some of the different hedge funds, that it's no longer just crypto hedge funds, it's more of the institutions on TradFi side. But like, how are you guys like positioning yourselves in this as the leaders in this space? Any new products that are coming out in the next 6 months? Are they all on kind of hold until that more clarity on the regulatory side? Just curious on that.
No, I think you still got to be building. For us, it would be, already in 2024, we started looking at sort of altcoins as collateral. So we did a lot of lending against Solana. I'm much more confident in that because I think, Solana stands a good chance of being maybe another ETF approved within the next, 1 to 2 years. So that's one aspect, is like, going after like wider set of collateral, and now the market of altcoins is bigger. And then the other one is I suppose in terms of the really like the kind of the clientele that's using the products. We're starting to see, as James mentioned, a lot more like custodians and some of these other CeFi players coming in. So you've got more opportunity for kind of integrations with them. So that's probably other call out.
And likewise for us, it's actually the reverse. We're integrating folks like the Maple positions or other DeFi solutions into our primarily CeFi system, and as well as positions that folks have. We've been seeing more and more exchanges getting into the lending business and getting into providing on exchange leverage to some extent. And so we've been hearing from folks that, hey, now I have loans in kind of 3 different categories. How can I see all of that at one place? A big focus for us. And James, I don't know if you have others to add.
Yeah, the one area that's a bit, I'll say, kind of on the more the bleeding edge that we're very excited about is leveraging things like zero knowledge proofs to obfuscate trading history. So, if you think about a hedge fund that wants to obtain leverage from a lender, one of the biggest things that they're unwilling to give away is their proprietary trading algorithms, or a history of trades that they've had. So we've been speaking with folks in the space around trying to come up with, okay, how do we implement, how do we give people the ability to make decisions on lending based on risk metrics that are highly granular, that provide a significant amount of insight into what's going on under the hood without actually giving away the distinct trade details that are taking place. So think of zero knowledge proofs that can be where trade histories can be saved either in a decentralized database or centralized database, and then there's a group of folks that are validating to make sure trade histories are actually true, but then not actually seeing the underlying trade details. So getting people greater comfort in to whom they're lending, because you can start to pull both an off-chain as well as an on-chain history for folks and not necessarily give away all the salient details of those trades. That's an area where we're excited to lean into as more and more folks start to get more and more comfortable with potentially those funds being lent, and just more comfortable with the smart contract architecture in general. Whereas I think as institutions start to come in, that's going to be a big question they have to ask. How do we underwrite the risk of depositing funds into a smart contract? And I think over time, that'll get easier and easier.
Are we at a point now? Oh, sorry, I didn't mean to cut you off.
I was going to say the other thing, just to call out now that I remembered, is the number of stablecoins coming through. Like, I think you saw like Stripe acquired Bridge. That was a big bet on stablecoin payment processing. Ripple's got a stablecoin coming. Revolut has a stablecoin coming. Binance just announced a new type of stablecoin, which is modeled on the Athena basis trade. And so that's probably the space where we're seeing the most kind of proliferation of new technology and kind of growth coming from. So you could see different stable coins being supported as loans on Membrane, for example.
Yeah, that's
so
definitely
brought up everyone's talking.
No. I was just going to be. I was nodding in fervent agreement. We totally are on the same page there, and we agree. And all of these folks, are going whomever the stablecoin issuer is, apart from just getting those stablecoins into the market. Okay, what's a safe and effective way to provide financing or leverage so that folks can actually utilize these things both on an on-chain world and in an off-chain world?
Yeah,
And
I was
then
gonna
also
just
relate.
jump in. I guess we're all talking again. We're doing this live, folks. Sometimes you can't edit it out live, but I just wanted to ask a quick question on the stablecoin. You brought up a good question for those listening right now. Do we need all these stablecoins? Like, why are there so many? And are they just going to proliferate where every company does?
It benefits consumers. It's kind of like railroads in the 1850s, right? Like, as soon as it was proved to be this profitable business model, which Tether proved in spades, on like their revenue per employee has to be off the charts, right? So as soon as that happened, like I think a bit of a gold rush was on, and so you've seen really quick entry. PayPal's in there, Revolut's coming in, Ripple's trying to get in there. I think ultimately a lot of these guys who launch stablecoins will lose money, but it will be really good for consumers because it will make international payment processing super cheap. It will decrease the cost of providing financial services and banking services for the consumer. But I think it's probably going to be a bust for most of the firms launching them.
Yeah, and I just to pile on there, I think it's awesome, the proliferation of the number of folks trying to experiment, get things in the market, create different on and off ramp capabilities. I think the big thing we'll see is both, we'll see creative destruction over time, as other stablecoins start to introduce kind of yield bearing. I think that has to win out versus things that don't. And so therefore, we'll see that play over a long period of time, but you also need distribution and you need ubiquity and you need to be everywhere that people want to be. So I think there's kind of a trade-off at that point. And as more utility starts to pipe up on various chains and, in the on-chain world, I think it'll really be important that the distribution take over and coins can be everywhere they need to be, or stable coins can be everywhere they need to be, so that consumers can benefit from that. But I do think over time you'll start to see the number of these go to zero as some companies can't support the usership and the model doesn't bear out, or so on and so forth.
So I'll take the opposite side of some of that and say that I actually think we have that we have not seen. This is just like an itch of where this is going to go on the stablecoin side. And the reason I say this is you're going to start seeing the wealth management side come into this game. And the wealth management side is going to come in looking for yield because they want to, if you've been following the RIA space, all the custodians, they're all getting hit right now by the SEC for, taking too much yield, not giving the customer enough, etc. I think this is really what the industry needs for that transparency to show, here, you want to see it. Here's how much we're taking, here much you're getting real time. You can see it live. And then the other piece of this is look what Cantor Fitzgerald did yesterday. It was yesterday or the day before with launching, they're looking to put, what was it? Like $6 billion, some crazy amount.
$2 billion.
Oh, sorry. Yeah. Only $2 billion.
Getting excited, Sean.
No, I mean, they want to lend it out into the, they want to make it available to lend out, but they're also they took a stake in Tether. I mean, that's one of the oldest bond trading firms out there. And why are they getting involved? Because they're managing all the treasury for Tether. So this is actually a good thing. Stablecoins are a good thing I think for the government too, because it helps the dominance of the dollar globally stay backed by USD, and it's someone buying up all of our debt. So, I mean, we definitely
Tether
need
is a
more
top
of that.
20 creditor I think, at this stage of the U.S. government. So certainly the U.S.
Top 20
government does
creditor.
need more creditors.
Well,
Yeah, so I think we're all in agreement. I don't see how that's the other side of the coin. I think we're all saying the same thing, which is the proliferation is great. The more, the merrier. And I think you'll see creative destruction. Some will die out, some will continue to live on, but they continue to iterate in the space. We obviously know yield is a huge deal, and there's an opportunity cost to holding stable coins that don't offer an associated yield. So I think that will have to change. That will just have to, as there's more, ubiquity of folks using stable coins and using them on chain.
Yeah,
and it's great for businesses like ours, not only for the additional lend borrow of those assets themselves, but also a lot of these, especially on the yield bearing side, these stablecoin issuers are treating these almost like quasi money market funds, and so they're deploying yield or yield generating activities on the other end. And likewise, I think even with
both our companies are effectively like picks and shovels providers to them.
Yeah, that's right. And I want to get into a little bit of that, and I realize we kind of just jumped into the conversation, and there's probably a lot of people wondering, like, who is Maple? Who is Membrane Labs? So, if you guys want to just give a quick overview, but mostly focus on some of the updates or milestones you guys have, achieved over that, and then for those listening, we're going to get into the bold predictions for 2030 right after this, which I think will be very exciting. But James, you look like you were ready to jump in here. So I'll start with you.
I mean, just to catch everybody up, Membrane is an institutional platform for assisting folks with their financing and lending activities, as well as other OTC trading activities such as derivatives, as well as spot trades. So we also manage, we also have a treasury management platform as part of that, because we are custodial agnostic, integrate into most major custodians. So we're a full lifecycle management for all of those types of products. So think of us as, as Sid correctly pointed out, picks and shovels for those folks that are dispersing loans, any borrower of that sort, or think of us as what's under the hood for custodians that are branching out into lending or running a prime business or running any sort of business that is a recipient or or obtaining leverage.
Mm-hmm. Any milestones? Oh, go ahead.
I said a product. He should be up to speed on our milestones.
Yeah. I can say that this year in 2024, we've seen $4 billion of loans being booked. About 3.5 of that was historically we've had $4 billion. 3.5 of that was in 2024 alone, and we've actually just surpassed $1 billion of active loans on the platform right now, just the other day. So yeah, we're excited about that.
I was gonna say, when you said that first number, I was like, that's pretty damn solid for the year,
Yeah.
But I mean,
well, it took a while to build the product.
Oh, for sure. I mean, it's, you guys all brought up like custodians getting more involved. The one question I have to the group is, having worked for a custodian in the past, how does all of this, how do you get that trust? Like, how does the industry get that trust? Because I think there was a lot of, I mean, sure, FTX is in the rearview mirror, but how do we regain that trust? Is it really the institutions coming that's going to give it that, or, just open that up to the team?
I think it's transparency.
Sid, yeah.
Yeah, I think it's transparency. So I don't think institutions coming in breeds trust necessarily. I mean, you can see in pretty much every poll this year, institutional trust is at an all-time low, right, across multiple industries. So I don't know that's the right move. But I think it's transparency. So doing more of this lending on chain. I think historically, when you look at the business models from 2022, it was kind of like a bank-like black box where you had maturity intermediation, credit risk intermediation, but no reporting at all. So you never knew the equity balance, the collateralization level, or the loan performance in the books. And so since then, in our model, we've tried to put a lot of that on chain. And so if you go onto the Maple web app, you can see the collateralization of all the loans, how they're performing. They're segregated, they're in different structures, and they're collateralized. And so I think moving towards that more like fund-like reporting model, where anyone who's putting money in is entitled to see how the loan book is performing, is a distinct difference from what what was pervasive in 2022, and is ultimately what's going to be required to get people to put money back into these types of strategies. And I think Membrane does a really good job of that too.
Sid, we didn't want to cut you off. I realized Sean jumped the gun on the last question. So for those listening, can you just give a quick overview, of Maple?
ELI5? Yeah, for sure. So Maple is an institutional lender. So we will lend to prime brokers, OTC desks, exchanges, funds. So we're always lending on chain. So they take stablecoins instead of dollars. The loans are pretty much all over collateralized, and so we take BTC, ETH, Solana, other large caps. But we've done about 5.2 billion in loans since we started 5 years ago. And then our assets on the platform at the moment is about 560 mil. And the recent milestone we did was 2 weeks ago, we launched the Syrup token, which is the governance token in the protocol, and we made staking available. But that allows holders to participate in the long-term growth of the protocol, and also indeed in governance. So that was a big milestone for us. And then the product has two kind of angles. One is Maple Direct for institutions, and the other is Syrup, which is DeFi facing and for offshore retail users.
Awesome. We have a first question before we get into the predictions from our very own Jody. He was asking, how does the basis of Bitcoin as collateral change since the last cycle? And do you see this extending into other assets besides Bitcoin and staples?
Well, I think
you go, Craig.
Oh, I was just going to say, I guess it depends on what we mention as basis. But yeah, I think that we've definitely seen expansion like Bitcoin and ETH, as assets that folks can have. But we're also seeing, as Sid mentioned, folks going in and dabbling in Solana, and then also going further out the risk curve, I would say. And that's actually ties directly into what we're working through on our plan is as folks get a little more and more sophisticated with the risk metrics that they have and start analyzing historical volatilities and lookbacks and correlations, like there's models that you can run that aren't necessarily novel per se, but more novel for crypto where you should be able to come up. There's no reason that in theory you wouldn't be able to lend against significantly more than just Bitcoin or ETH if you're a proper kind of prime broker and you have these models that you're confident in. So we're already seeing that. We're seeing folks that are willing to be able to take additional assets. But I think the fact of the matter is just a lot of people are sitting on Bitcoin and ETH and are long and have a lot of it there, where it's made it a little less relevant relative to someone having, being long a huge position in AVAX or Uniswap or something like that to warrant, the size of loans that these folks would want. But we definitely are seeing it extend beyond just Bitcoin, ETH, and stables.
Yeah, plus one on what Craig said. So this year we did a lot of lending against Solana. So that was probably like the next logical move after BTC and ETH, given the size of the market cap. But to Craig's other point, we also started looking at DeFi native tokens. So we did a Pendle fixed income position. So it's like a zero coupon bond. So let's say it starts at 80 cents in the dollar and it's going to drag towards $1 at its maturity. We lent against that. We also lent against a stablecoin pair where one of the stablecoins, this was in Camino, and one of the stablecoins was the PayPal USD one. So this is, again, what I mentioned around railways from the 1850s. PayPal spent, somewhere between 40 and $50 million on marketing. A lot of that went to yield. And so that meant that hedge funds wanted to hold those positions on chain in DeFi protocols. And so we started lending against that. So that was really like an opportunistic play, but the market is definitely willing to tolerate other forms of collateral beyond BTC this cycle.
Yeah. Sid, a question I have for you. So Maple made some predictions for 2030. I mean, in crypto time, that's a long time away.
Many dog years.
Yeah, but the other one, one of them was managing over 100 billion in annual loan volume, and then this one actually really excited me. It was facilitating the first decentralized corporate bond. Because I actually worked for a corporate bond firm back in the day out of New York. And that being said, like what are the steps that you're taking now to kind of make this a reality down the road here?
For things like the corporate bond, you've already seen some TradFi firms issue some of these on Polygon and some of the other L2s. But what we would be excited about is kind of a more DeFi native one. Often it kind of seems like that's a bond, and then they just create like a copy of it that's a token.
Right.
So what we've been doing a lot of over collateralized lending. In the past, we've done under collateralized lending, and I think we have a lot of the steps already in place. Really, what we just need is what you call investor appetite. So bonds, you don't really want to do a bond for like a few months. You want that to be 3 to 5 years. And the only thing that's missing is capital that's on chain in stablecoins with the appetite to be to collect a yield over 3 to 5 years. I think that's really the one thing that's missing. And so I'm pretty confident that you don't have to wait until 2030 to see that first one happen. I'd be betting that one of those could happen within 2 years.
Yeah, I mean, are we going to see some of the bigger, like, if I'm remembering right, wasn't like TradeWeb like a big player in that market, in the corporate bond market access? Obviously is like one of the big players.
If you've seen some proposals to turn on fee switches for protocols. So you can imagine like Uniswap was looking at turning on a fee switch. Athena recently had a proposal to turn on a fee switch. Some of these protocols generate tremendous amount of on-chain revenue. And, it's not hard to envisage that you could have a bond backed by some of that revenue on chain within the next couple of years, and investors can audit it in real time and see what those protocols are earning. So in a lot of ways, it's actually better information flow coming through than what you can get in traditional markets, where you have to wait, either 6 monthly or quarterly at the least, but otherwise 6 monthly to get those kind of results coming through.
Can't go through an interview without asking an AI question here. So we've seen AI basically infiltrate every single element of every industry for the most part. Now, one of the predictions you mentioned was like AI agents. We've seen, I don't know if this story was real, but like in the meme coin space, Godius Maximus was like a one that like really took off. It was like an AI bot. Basically, they said that had $1 million+ now of the token. Moving more kind of away from meme coins. How do you see like AI agents managing credit pools? And is this something over the next 5-10 years that is going to be more ubiquitous amongst the markets?
Yeah, I mean, we put that prediction out, and I have a pretty high degree of conviction in that one. We have at the moment guys who underwrite those pools, and so they'll set the collateral level, set the allowable list of collateral that we would accept against loans. But as we scale, we'd like to be doing more pools without having to, quintuple the number of, analysts and underwriters we hire for that. And that's where I would love to have AI agents being responsible for a lot of this. In a lot of ways, you've seen the beginnings of this with some of the DeFi lending protocols like Aave, where you have, algorithmic settlement and management of collateral. Really what we're talking about is not too far removed from that. If you were to have an AI agent who could set the collateral levels that we might lend to an OTC desk or a prime broker on chain at, look at different signals, and then either curtail that or change the interest rate that it's setting based on what basis is currently paying. It's obviously a lot less complex if it can do this in collateralized lending. I think it's probably further out before an agent is going to be underwriting people's balance sheets. But this is one that we're super excited about, and we already start passing our portfolio through through AI to kind of tease out insights around volatility and volatility and pricing. So that's
we're in full agreement, like on that front, in the sense that AI is really better positioned to take in and then make decisions based on the sheer volume of data that's being output that you would want to have as an input in terms of making decisions. And we also believe, obviously we're talking about different segments. I think the institutional market will be reticent to kind of entrust credit decisions to an AI agent, one that they haven't necessarily had insight into or haven't contributed to kind of the inputs and what's driving the underlying model. But certainly for the retail community, having shoot, I wish I had an AI agent making decisions on which meme coins I bought, because frankly, I haven't done a good job on that. But I could see a world where, if you're not sitting around kind of following markets, to entrust funds into an AI agent to kind of find yield opportunities. People are already doing it with Aave, as Sid mentioned. I don't think it's a stretch to have that sort of in an implementation, either in Maple or other of DeFi pools. We're actually in complete agreement, and frankly, one could be built to do my job. Maybe I'd take it up on that. I don't know, but they already are. Anyways, maybe they can do this podcast. We'll have 5 AI agents talking to one another, and then
Well, we have a surprise.
Yeah, I have one in my back pocket. You're not even talking to me. It's actually an AI agent. Yeah, exactly.
Actually, I saw a thing last night. I gotta mention this. I saw a thing they're advertising like ways to show that like a clip is actually AI generated versus like traditional. It was interesting. I know I'm just waiting for like Thanksgiving. My parents are gonna be like, "What's with this AI stuff?"
Oh yeah, just gear up. You're
exactly
up for it.
Right. Exactly.
Blockchain can help with authenticate. Go ahead.
Blockchain solves everything. Now AI is going to solve blockchain. So, then it'll be the next thing. But
It's
no,
perpetual.
so exactly. So Craig and James, on that note, like if you were to publish a similar list of bold predictions for Membrane, what would those be for you guys?
I think top of the list, maybe somewhat provocative, but by 2030, I think we'll be a contributor, a big time contributor, or part of the development of an on-chain protocol, around potentially kind of what we had mentioned before in terms of, on-chain lending. We'd like to not compete directly with Maple, obviously, but, in there providing a different, call it mechanism for extending credit. I think that's one. We also think that there's going to be space for, in the next however many years, 5 years, I think that was the timeline, right? 2030 we do think, although there is a graveyard of people that have tried to do this in crypto, we do think that there will be a regulatory compliant and potentially backed by a clearinghouse lending marketplace for overnight lending, or for the ability to exchange supply and demand with one another in a bilateral nature. It's multilateral, but you're able to, effectively obtain locates. We do think that, we're starting to get that critical mass where people are a little bit tired, at least in the bilateral markets, of having disparate pools of liquidity, not knowing who is in the market, and establishing sort of an underlying widely sort of accepted medium of exchange in terms of, a rule set and some market standards that could kind of facilitate the movement of capital back and forth in a much less antiquated way that is today, where you got to negotiate a doc, you got to, pull things over. We see that as kind of the future, and we're looking to participate in something like that.
Awesome. Yeah, no. So I mean, we're coming up on time here, and I mean, honestly, I think we could sit here and talk about this stuff for hours on end, because, there's plenty of different, opportunities that come about. If folks want to follow you, where will they find, start Sid on your side? Sid, where will they find Maple on Twitter, LinkedIn?
Yeah, so we're
X.
at Maple Finance on X. I always slip into calling it Twitter as well. It's a hard habit to break. And then I'm at Syrup Sid on Twitter as well. And then our website is maple.finance.
I'm gonna have to create like the pancake, the Sean pancake or something.
We'll get you some pancake merch. Don't worry, Sean.
Oh, we need it. The syrup hats. We're at membrane_labs on X, membranelabs.com. And then, I'm at _Craig Birchall on X. James, is your X even private or public?
I'm on there. I'm just not super active.
Doxing them live.
I don't know. It's it vacillates between extremely relevant and useful and a lot of noise. Sorry, Elon, but it's, I'm more of a consumer of content, I would say.
There you go. Well, thanks everyone for listening, and thank you, Sid, James, and Craig. We'll be editing this up. I know we talked over each other a few times, so we'll be posting this live, and then we'll also share everyone's handle in case you guys missed it. But thanks so much for tuning in, and we'll be back Thursday. And happy Thanksgiving early to everyone that is listening. So appreciate you guys joining.
Yes.
Happy holidays.
Happy Thanksgiving.
Thanks, guys.
Thanks all.
Thank you
That was
guys.
great.
Thanks very
You bet.
much.
See you guys.
Thanks again.